Everyone, welcome to the weekly review. And quite a interesting week. We had a breadth surge on the month turn on July 1st, meaning a rotation from the momentum and tech names and into staples, healthcare, more of the underperforming sectors this year. Now this is the Naim print with breadth indicators, and like I said, we had a breadth expansion this week. These are the times in the past year or so where Naim had an 100 or higher print, or close to 100, like 99, what we have yesterday. And one thing to note is that we've never had one of these prints into expanding breadth. This section here is similar to what we're seeing now, in my opinion, but the print came earlier, and we had this breadth expansion right before a pullback, and it looks very similar to what's happening now. And even this 6.6% in features today is sort of confirming this, but the situation is actually more nuanced. Like, even if we do a pullback, things are pointing to a rotation happening, which will give this rally more legs. Our first goes to the correlation with the 2018 pullback. In theory, we are at the top and we should do a pullback to the 5800 area. Let's see how big this would be if we get a full one, which I kind of doubt at this moment. So around 7% if we do the full thing. It could be smaller because it depends how it happens. Like a pullback that has no rotation in it is everything drops at the same time. Kind of seeing this here right now, but we could see a rotation pullback, meaning let's say Q's drop, we see more unwind of the momentum and tech trade, and then we see a rotation into the things that have been performing well lately, like banks, like staples, and stuff like that, solars and so on. So if we see that type of rotation pullback, this is probably going to stop maybe here, like go back to 6K and hold around there. But if we do a full rotation, maybe we go to 5800 or something like this. If the rotation comes now, it's still under debate. Like, having this expanding breadth at this moment is kind of counterintuitive. But when we look at individual sectors, everything looks pretty constructive. Like, for example, even XLE, which only went up from that Israel-Iran war thing, is still, in spite of oil going back down, is still holding pretty well and more or less going higher, like turning previous levels into support here. Let's say even this one, like turning this into support and going higher. Even individual names look pretty good, like SOM going higher, CVX going higher. Everything looks kind of okay for oil, and it's not at cycle highs or anything like that, but this looks pretty okay, and like MPC making new highs. Uh, yeah, probably like 6-month highs or something like this. So this still looks pretty okay. We have XBI with a small breakout here and looking constructive, trying to go higher. Even XLV, in spite of the dump from CNC, was it? Yeah, CNC had this dump here and brought it back down. This was the high breadth day, which is visible in XLV as well. And most of the names gave it all back the next day because of CNC, but it's still looking kind of okay, like it's making higher lows and recapturing some of the moving averages. Like, we're back above the 50, back above the 20, trying to go higher, consolidating here. So it's not perfect, but it's constructive. XLU like a pennant here, and again trying to break out. XLK is tech, so it's supposed to be at highs. Even staples, like on that hybrid day, it was a falling wedge here and broke out and looking pretty good. I think we recaptured some moving averages as well. So back above all the moving averages. Even if we go back down, I would expect we hold in this cluster here and start going higher again. So everything looks pretty constructive, more or less. XLI, even with Tesla being underperforming and being pretty weak, it broke out of this panel here and trying to go higher. Industrials broke out to new all-time highs. Materials broke to new highs here, like recaptured the 200 moving average, and a big impulsive move higher and recapturing this horizontal level here. So again, pretty constructive. Real estate is kind of underperforming, but this might break out soon as well. Like it's not looking bad, it's not looking great either. But if it can break out here, I expect a surge back to time highs. So real estate can do well as well. Communication is tech as well, so don't care. Banks broke to new all-time highs. Still have a bit of room to go. Bullish flow has been very bullish on banks in general, and everything is going to new all-time highs like JPM, new all-time highs. Goldman Sachs, new all-time highs. Schwab, new all-time highs. Citi, new all-time highs, and so on and so on. So very positive flow and going higher and higher right before earnings season. Cree recaptured the March 2023 crash level and broke this horizontal level finally and going higher pretty aggressively here. ARK is at local highs in spite of Tesla underperforming. I would still like to see tech like at least consolidate in this area, not go higher. SMH as well. This has went up way too much, way too fast, and I would like to see them consolidate, do like a pullback of the 50 again, something like this to consolidate. The one that has been underperforming significantly and looks weak even now is China stuff. I don't really understand why, but BABA has been underperforming significantly. Uh, It went to the 200 MA I see on Friday. Maybe it breaks even below. There was that 100 put flow that I posted a couple of days ago. One interesting overperformer, which doesn't make sense absolutely at all, is Solars. And names are like SEDG, Enphase, First Solar, and so on, Run. And this doesn't make sense because they've been absolutely gutted in the news lately. Like this dump here, this one 47%, and another one 40%. This was from news of the Trump bill that it's cutting stuff that was supporting for solar and clean energy in the bill. And in spite of the negative news, in spite of yields not going lower because of the news as well, like for example yesterday's news report, these things are going higher. And they're sensitive to yields, they're sensitive to subsidies, and they're losing subsidies. Yields are not going lower, and in spite of this, all they're just jacked to the tits and going higher, like ICLN, ACES, Clean Energy ETF. So these are Clean Energy ETF. This is Solar ETF, and I simply don't understand why these are going higher. But this reminds me of the 20, for example, let's say SMH. It reminds me of this period here at the 2022 bottom when people were too bearish, including myself, and we were not respecting the strength things showed in spite of the bearish headlines and bearish data, and more or less things started rallying before it was clear that things are not that bearish. And this move in solars is giving me the same vibes here. Like it, like I said, it makes absolutely no sense for these things to be rallying with the news that's becoming now lately, with the Trump bill cutting subsidies for solar stuff and clean energy stuff, and yields remaining higher because these things are sensitive to yields because most of their product offering is financed by taking a loan or something like this. So it makes no sense, but you have to respect this. I would expect they will give an entry at some point, like they maybe do something like this and then do the full breakout and go higher. But this, keep an eye on these ones because again, this type of strength into extremely negative news and context is to be noted. Okay, so this being said, It's actually more like we have bullish crossover 50 above the 200 on SPY. For Qs, this happened this week. For Qs, it happened last week. IWM is building towards it as well. We had a 50 over 100 crossover. DIA is coming very soon as well. So everything looks pretty okay. Like even if we do a pullback, most likely we will go significantly higher afterwards. And now the only question is how low do we go? I would assume a test of the 50 is at a minimum, but we can still go higher next week as well. So either 6K if it's a very soft pullback, or we get this 200 MA tag on SPX in the 585 area, 590 area. So those would be the targets. We'll see if this correlation holds or we go higher from here. I kind of doubt it. So this would be like the overall setup. Now, on the negative side, I don't like crypto at all. This looks quite weak. Like, for example, it's been very correlated with tech, but tech has been going up much more aggressively than Bitcoin. And it's like we had this correlation here that went together, but now tech has been going higher and Bitcoin has been making lower highs. You could say that this is consolidation, but when we look at higher time frames, like for example the weekly, we see we have this kind of divergence here as well. Like for example, the one we had at the 2021 top, and it was a huge one. We have this one here between this high here and this high here, and it gave us this correction, which was significant. Now we are recovering, but we haven't even made it to the trend line in spite of making new highs. And this to me looks weak. It's either a continuation on the divergence. Let's say we have a bit more upside and we go to the trend line, like we have a breakout here. It doesn't stop where I do it here. It goes higher, and that becomes a fake out, and we correct afterwards. But I don't like this look of Bitcoin as at all. It looks pretty weak, even if there is a bit more upside here to go maybe like 112K or something like this. But I would expect this would correct to like 87, just shy of 90K, 87, 85 maybe, something like this. A retest of the trend line is to be expected in my opinion. Maybe it's not that harsh, but I simply don't like it the way it looks right now. It seems like a fake out move higher to me, and I don't like it. And on the other side, we have ETH, which looks like shit as well. We have this ever since this May candle, we've been getting rejected at the same level, this 25.53 level. We tried once, twice, three, four, five, six, now 7 times to go and close above it. And even this week, in spite of the move up in everything, this got faded eventually and closed at this level. So I want to see a move higher on strength. Otherwise, this is a very rejecty area. And after this many rejections, I would expect it goes like went lower again. But if it gets rejected again, it will go lower again a third time. So this doesn't look good, doesn't look strong, and combining with the divergence, the huge divergence on weekly on Bitcoin, crypto looks pretty bad. And as a let's say risk appetite kind of indicator, it's saying that things will go lower overall, even including equities. Yeah, so that's kind of the setup. We overextended. VIX didn't go make new lows yesterday. I tried to get filled and didn't get filled. Tried to get like 20C for September, and I think I put another at 290. The low of the day was 291. Probably would not have gotten filled as well, but instead of going lower and lower to the day as equities were going up, I think that contract closed 305 or something, 3 or 305. So it went higher than the open and didn't get filled. It's fine. It happens. No big deal. There wasn't going to be a big position either way. So VIX is saying we're at the top. Bitcoin, crypto kind of saying we're at the top, or at least we're not going higher here. We still have many names that are overextended. Not Apple, Nvidia, Google, stuff like Hood. It went even higher on that random news this week, or sort of random. Netflix still super overextended. TSM super overextended, and so on. And on the other hand, we still have some constructive stuff going on as well, like CRM. If you remember when this thing dumped from earnings, it brought DIA down with it completely, and it's been in a downtrend ever since. It's trying to recapture here, like when we look at the moving averages, trying to go back above the 50 and turn back crossover above. So if this does it, it could be pretty good for DIA. What else do we have? We had Merck, and some of the healthcare names still look decent in spite of that dump follow up in the week. Like they're trying to turn around and cross over and turn stuff into support. We have UPS who responded to the positive red day and again turning the 20 and the 15 to support, could do something like another pullback and then move higher again. And FedEx, same kind of thing. So this is good news for the transportation average. We have stuff like Pepsi also trying to go back above, like we recaptured the 50, could potentially go down again, go higher. Same with KDP. Same with what was the name? Let's do Walmart. Seems to be turning back up again. Costco. So staples, healthcare look kind of okay. If the rotation continues, this could lead to a move higher. These are some names that I marked as bullish. Everything except what was Philip Morris. So Philip Morris, I think it will break down soon, but go back, sorry, go back, turn the 20 into resistance, and eventually break down and go at least to 100, or ideally here retest the 200 MA. But everything else look kind of okay. Adobe may be finding a bottom here as well and starting going up. Zoom looks kind of okay with this falling wedge attempt to break out, recapture to 250. But yeah, you get the idea. Lots of names that could potentially break out. Team broke out yesterday. Real looking pretty good and a potential breakout as well. RH, which the home furnishing slash home construction sector has been kind of lagging, like I showed real estate ETF, but this is looking pretty good, and maybe we see a move higher here, like ITB home builders ETF responded well to the red day, and they had a 4% move, and now could do something like this, continue moving higher and breaking out. So this I'm talking not for the immediate future, because I still think there's a bigger chance we see a pullback, especially with features being down. But I'm fairly certain we will get a form of this in the next 2 weeks. The only thing I would like to not see is a continuation up next week, because it messes up the correlation and it would become invalid. Still, I don't think we have more than a week in us of going up, and the pace should decelerate, should be more like a sideways move, slightly moving higher. And as we get closer to OPEX week, or even CPI, the CPI print on the 15th, we could start a bigger pullback. And the higher we go, the more likely we get a bigger pullback before, if it doesn't happen now. So yeah, that's kind of the thing. What I would like to see for Monday is potentially we get a gap down to this level. And that would basically make this candle an island. And island reversals are very strong, meaning you gap up or down, you do a candle here, and then the following candle is in the inverse direction and makes and opens at least at this gap level. And this makes a complete gap island here, and this would signify a more substantial reversal happening. So if this gap is filled but in reverse by opening and leaving the gap open in the other direction, that would be a very negative setup for the market. And it would be the same if it happens lower, like if it happens at the bottom. So that would be the ideal scenario to confirm that we are bearish and likely going to be bearish next week, is if we open at this level or lower. So yeah, that's it for now. Have a good one. Bye bye.